essentially, just to tell you kind of about the provenance of the fund, we were an angel syndicate. We backed businesses which, mostly when we put arm's length money into companies, it was a terrible idea. Angel investing, on the surface of it, is actually, you're more likely to lose money. Why would you on earth do it? It's a crazy thing to do. Actually, what we found is when we had good people involved in that money, and we use the word skin in the game, which is a terrible expression, but everyone knows what it means. And when that happened, when we found, and funnily enough, it was through Steve, informally, that we found one of our first, what we now call venturer, to come in and look at a business which is doing phenomenally well. I'll mention it's called Certivox. I'm probably giving that business the ultimate kiss of death. Oh yeah, this one's a dead cert. It's not. As Richard knows better than I, venture capital is one of those, it's just, it's a never-ending roller coaster. However, it is doing very well. Look them up. They're raising big bucks, fantastic partners and customers, and it's in encryption software. And we helped Steve. The venture isn't with us, with that company anymore, but to kick that off, the important phase was a venture. And it's kind of formed the basis. So what is a venture? A venture for us is really where it's an overlap of the people that are in this room and the people in Steve's and your network, plus the ability to finance them, back themselves, and the risk and the willingness to do so. Some people in this room and outside are experienced what we call angels or investors. Some people might be first time, but it's the mindset of saying, okay, as long as there's something more than just my money, options or deferred or something, yeah, that's a given. But do I want to back myself? Have I come across a business that actually I'd quite like to put in some money, but I need some firepower to either buy it or get a sensible chunk to have a meaningful stake and grow it. And that's really what we came across and what we call this venturer. And it's somebody typically with corporate experience and venture experience. So it's a combination of the youngsters in this room and the grey hair in this room at the same time, which is, when people dig deep, some people don't have one, some people don't have the other. We're dealing with businesses usually turning over a few 100,000, sometimes less, but never startups, never from cold. Our last business, just last week, we actually invested in an AIM business, which is turning over 3 million quid a year and is set to do more. Richard's involved in that, well, we're both involved in that. So we do a wide spread, probably not at the top end of some of the SMEs that you're involved with, but certainly in the middle and the lower end, and certainly when there's cash involved. And that's what the venture does. The bullet points of the fund itself. So we go along, we invest in businesses, usually a few $100,000 at a time, and that's been going well for us so far. That's all great. It's tax efficient, it's EIS/SEIS, and if you guys don't know what that means, it's probably not worth explaining it to you, but there's at this point, I'll explain later, but it's a tax efficient way, which means that even if things go wrong, you actually get 75% of your money back, which is quite nice, particularly if you're investing in the riskier stage of business growth, which we are. And that does well. We always invest business only, tax later. The tail does never wag the dog. We have set up a fund, and we spent great pains knowing the philosophy that Steve espoused earlier about NXD, the philosophies that we have, and clearly there's a lot of overlap, to make sure that it was a fit. So this fund is run exclusively for NXD members, and it's managed by the investment team, so it's FCA regulated. We're still doing our job with our responsibilities to investors, just like we would any other fund. However, there's extra privileges, are first rights basically on deal flow. So in other words, if you guys have got a deal that you wouldn't mind putting money into and bringing that deal to get funded, then this is a perfect vehicle. Even if, frankly, if you're not invested, but clearly the spirit is that you will invest, and I'll come on to that in a second. The second point is actually privilege on the venturers. So again, you're kind of hearing this made-up word for the first time, but if you interpret that in your own language, and clearly it's probably what you all are, and you fancy being one of those and in a sector, then you can come along and put your hand up and say, yep, I'll fancy that. So you can bring deals, you can bring yourself. The third thing is the money, and we've made it as flexible as possible. Our normal minimum amount to invest is 20 grand, and most of our average is a lot higher than that. It's just because the people we talk to and that we attract and other angels and everything else. We've lowered the bar quite considerably, and we've got compliance. It's all completely above board that we're allowed to do this. Is a 3 grand ticket, if you like, minimum ticket. Now we treat it, by lowering the bar, we're not lowering anything else. It gets managed, we have the same serious responsibilities. But I guess from the logic of the tax breaks and also hopefully the quality of the team, and you can do the due diligence on us, and clearly you're backing yourselves and your colleagues a lot of the time, people you know, that it's a way for us all to participate and all have skin in some game. That is an NXD game, or not a game, but I'm stretching that one, but ecosystem.